Hello everyone, this is Nick Perry of Schaeffer's Investment Research with your chart slideshow for Friday, March 9th. Today I am back with my weekly check of the broad market indices. In last week's chart slideshow, the discussion was of course the big decline that we saw. Basically we had this big drop on the SPX, the Dow, the RUT, and also on the comp. We talked about these daily charts. We also talked about the weekly charts, and the takeaway was that on the daily charts we'd seen a fairly nasty pullback. We were more or less at the short-term support zones. The longer-term charts, showed that we were still away from support, but the takeaway was basically that the decline had been nasty, but it wasn't necessarily, breaking the charts. So let's go ahead and turn to this week's action. If you've been following the blog or the market in general, you pretty much can guess what these charts are going to look like. Basically, we saw a sell-off Monday, we saw a strong rebound on Tuesday, and we've sort of been drifting, somewhat higher since then. Basically, we had a decent day in the market yesterday. We pulled off of the highs, but we ended up finishing with gains on the day. This morning we saw some strong action in the futures market right after the employment report came out. That translated into the open. We saw a bounce at the open, but as we discussed earlier today, we've seen that momentum sort of fade. And here it is. It's roughly 3 o'clock, and a check of my screen shows that the indices have more or less drifted back to break even. So it looks like we still got an hour to go, so who knows where the daily charts are going to end up exactly. But as far as the week goes, we're going to have a pretty good idea. When we look to the individual charts, we see that, especially on the SPX, the Dow, and the comp, we've got some short-term potential resistance to deal with. Basically, what I'm talking about is this zone here. It was minor resistance there, minor support there, minor support there. We tried to hold on it on the first day of the big sell-off, and then we saw kind of a little bit of a dip below, and now we're pushing right back up into it. So, barring a massive move in the last hour here, it looks like we're pretty much going to finish right on that zone. Since we broke below it, it's potential resistance. But the thing to keep in mind is that it's, as I've talked about, technical analysis is not an exact science. At least in my view. Some people will take a more hardline approach, and that's fine. My view is I tend to use it to define trends. And we saw a dip below. We're right back up into it. I would consider this more of a congestion area, an area to watch. We did sort of hesitate as we pushed right back up into it. So, it sort of remains to be seen from my book whether this is, a bounce at support or this is going to hold a resistance. When you look at the Dow, we see pretty much the same thing. We've had this little bit of a round here, and we're stopped right there at that that zone, which is coming off those levels right there. The comp, we talked about this support here, the bottom of the range in this area here, and basically we get the same thing, the dip and the push right back up into it. The RUT is showing a slightly different pattern. Basically, it's holding at these lows here. Basically, the RUT had been in this congestion zone here. We had the breakout above, and now we've got the pullback right back into there. And I've done a pretty good job of messing up these charts, so let me go ahead and refresh the screen. As far as overall takeaways, in the context of last week's, action, we did see the decline. I said it wasn't enough to really break the charts. And when we look at this week's charts, we have seen a bounce. So there was a little bit of follow through in the beginning of the week. We've now reversed that, and we're more or less sitting, depending on which index you look at, near where we ended up at on the first big day of the sell-off. So we've basically had a little bit of follow through, we've got a little bit of a bounce, and the indices are more or less sitting in the middle of congestion. But before I wrap up the chart slideshow, I want to turn your attention to the percent of oversold stocks that I've been discussing. There's more information available about this indicator in the blog, but for those who haven't been reading it, basically what I do is I've got a database of about 2,600 stocks or so. Basically, it's not the entire market, but it's a pretty good representative sample of the overall market, at least the domestic market. And what I do is basically look at the short-term relative strength measure, the RSI. And what I'm basically doing is that's an oscillator that looks at oversold and overbought, and basically take and sum up all of these stocks that are at, in this case, oversold levels, and divide that by the total to get the percent that are sitting at oversold. And basically, when you see extremes, as this chart shows, that tends to, you tend to see extremes at the bottom. So I look at this during big sell-offs as a way to sort of gauge when the selling may be, getting overdone, at least on a short-term basis. As I discussed earlier in the week in the blog, based on Monday's night close, basically once we had the big sell-off on Monday, the percent of stocks in my database hitting oversold levels spiked to just above 50%, and this was the highest level we've seen since I think it was July 2002. So basically, when you look at this chart, gives a longer term view. It's kind of hard to see the recent action here, but it at least gives you some perspective. And the thing I've pointed out, and I want to keep pointing out, is that the idea that you have spikes, these spikes tend to run for several days and form a cluster, and there does tend to be a tendency to see these clusters and groupings. And just, kind of what I'm looking at is you look at the action here. Basically, you've got this spike here, and this is coming right as the SPX starts to turn down. We end up getting another spike that happens right here near the bottom. And now I'm wishing I had chosen another color aside from red for my chart so you'd be able to see that. But basically, you've got this spike, and then essentially you've got this little mini spike. And by the time that one hits, the decline was pretty much over. Now let me go ahead and clear off the chart here so you can see what I'm talking about. Another example is right in here. It's kind of hard to see. Basically, you had a spike, and then there's a slight dip below. The spike pulls back, and then another spike. On a longer term basis, you've actually could consider this spike and this spike as a grouping, and that's basically happened as this consolidation with a slight downward bias was taking place. And basically the point I want to keep bringing up is that what you tend to see is when you get the initial spike, you tend to be nearer the bottom than you are the top. And that doesn't mean that you don't have volatility and you won't have, some wild swings, but generally what you tend to see, at least what we've seen in the past, is when you do get the spike, you're closer to the bottom. And again, that's a dangerous thing to try to just say, well, we've had a spike, so therefore we are at a bottom. Because if you do see a massive sell-off, if we turn into basically another bear market, you would expect to see that we would see some more spikes and you'd see these clusters. If you look at 2002, basically heading into that bottom, we had the big spike here, and then that basically occurred, after this big decline, and there was quite a bit of chop, quite a bit of back and forth, and it's a fairly volatile range, and you had a number of spikes. So, this was by no means easy trading in this period here, but you were closer to the bottom than to the top. So anyway, that's it's an indicator I look at. Maybe you like it, maybe you don't, but it is something that I think is worth looking at and something I'll be talking about. So stay tuned to the blog next week, and we'll continue to watch it. Have a great weekend.